Welcome back. You're watching us here on Halftime Report. Bharat Forge stock continues to move higher. Good margins coming in. But let's talk about some more numbers. V-Mart Retail. The company reported a good set of second quarter numbers, aided by earlier onset of the festive season. We did have their second quarter update come by, and that is when Anand Agarwal, who's the CFO, joined us as well and did say that the festive season, they are expecting good growth to continue. Thanks a lot, Anand. And, the numbers are following what the update was. We did see good same-store sales growth, that reflecting to improved margins, etc. as well. But now that we have all of that and that's behind us, the question is, what next? The festive season, you have seen the sales of October. Bihar elections have taken place. We're likely to see early onset of exit polls, etc. coming today as well. How have the last month and a half been for you? And basis what you had told us earlier with regards to improved consumption during GST and the festive season, how are those numbers tracking?
Oh, hi, Mangalam. I think the numbers are still tracking well. We're still seeing better consumer sentiment. However, if I look at the Diwali gone by, this Diwali was a summer Diwali. So while the traction still is positive, we are still seeing growth. But if I compare Diwali to Diwali, last year Diwali was a winter Diwali. This year Diwali has been a summer Diwali. So thereby the the value of the merchandise is not so large, or the growth in value terms is supposed to be slightly less. But irrespective of that, we are seeing early traction on winter. So winter has just set in, and we are seeing good growth coming in on the winter front. So for the full quarter and also for the full year, we still remain optimistic for delivering, continued growth.
Okay. Sure. Mr. Agarwal, what about in terms of your overall store plans as well? Last time you spoke to us, you did highlight that you think and you believe maybe you could go above that store guidance that you all have given as well, which is at around 60 to 65 net store additions in FY26. This quarter, you all also have managed to add 25 stores. So what is that and what is the outlook there? Do you think you'll beat that guidance?
Yeah, I think so. We should definitely be looking at a much higher number. We already opened, in fact, 16 stores in October until date in this quarter. So 15 in the first quarter, 25 in the second quarter, and 16 so far. So we already have opened almost 56 stores this year, 59 stores this year. So I think we should be comfortably able to reach at least 70, 75 plus store by the end of the year.
Okay. Mr. Agarwal, just wanted to get a sense. So for the festive season, you had anticipated around 20% growth earlier. That's what you had guided. Are you on track for that?
Yeah, at an overall level, I think we still are looking at overall 20% odd growth, not just for the festive season. I think for the entire year, we are looking at, around, 17 to 20% growth.
Okay.
Festive looks positive, but it's still, the winter and the summer difference still has to be factored in. So far, the going has been good. We are still seeing growth. We are still seeing like-to-like growth. So that's a positive sign. But I think we still remain on track to deliver a full year number of around.
What about, just what would that mean for your entire P&L? Because you're currently sitting on an EBIT loss, or your net loss has reduced to around 8.8 crores for the entire quarter. When do you possibly turn into the black, considering that your margins had improved this quarter as well?
So quarter two is typically a loss-making quarter. So quarter one, we were profitable. Quarter three also should be very profitable. So on a full year basis, we'll definitely be profitable. There's no question around that. So in fact, this year, we've reduced our losses in quarter two by almost 84%. So that's been a good positive sign, and that will flow in through to the full year, profitability numbers, which should also improve marginally from last year.
All right. Just a couple of questions on the digital business and the inventory days. Typically, the third quarter has higher inventory because, you have wedding season, etc. So just wanted to understand how that has panned out. And on the digital business, you have constantly mentioned that, this will just be an ancillary to your overall physical retail stores. And as the businesses grow, there would be reduction in investment out there and the losses will reduce. That has happened so far. So what other metrics are we tracking in the digital business and on your inventory days, the wedding season demand, all of that?
The inventory is absolutely under control. So while at an overall level, the inventory looks slightly high, but in terms of inventory days, we have actually reduced our inventory days by almost 3% this quarter. On a go-forward basis, we are adequately stocked for the winter season. By end of December, our inventory days should in fact come down to almost around 90-92 days, which is again an improvement of around at least 5 to 7%. So we are quite comfortable as far as inventory days, also in terms of the working capital days. As far as the digital business is concerned, like I have mentioned multiple times in the past, we are consciously reducing reducing our reliance on the online business. We still maintain that we will be reducing our losses from the line road part of the business by almost 50% year on year. That's happened so far in this quarter, and that will continue to happen, till at least for the foreseeing, full year as well. So on a full year basis, our losses from the online business should come down at least by 50%, if not more.
Okay, losses will come down. And just a quick one, double-digit growth expected in FY26 and SSSG will be in mid to high single digits, right? FY26?
Yes.
Okay, great. Thank you so much, Mr. Agarwal, for joining us on the show and giving us insight in terms of the outlook of the company going forward as well. But on that note, we're going to slip into a very short break. More on the markets on the other side.